afternoon, everybody, and thanks for coming. I'll talk today about Apollo Silver Corp. We are a U.S.-focused pure silver play. Cautionary note standard. I won't take a lot of time to go through that. I will be talking about our resources that we've declared at our Calico Project. And there's some cautionary notes there that you can get off our website when you need it. Look, at a very high level, I'm going to talk today about a couple of things. First of all, stable jurisdiction. We are, as I said, a U.S. focus group. Our primary project is in San Bernardino County, California. I'm going to take some time to dispel, I think, some of the views that a number of people have on resource development in California. We give tremendous leverage to silver. If you are a silver investor, you really should look at Apollo. We've got our maiden resource, which we announced in February of last year, is 166 million ounces. And there's some significant growth potential that I'll touch on today as well. Oh, sorry, strong balance sheet. We've got no debt. We've got a 10.8 million in working capital as of our last financials. So we're in a situation where we're going to deliver on all of our objectives without the need to go back to the market for cash. And obviously, I think once we deliver on those objectives, we're really looking at a re-rating opportunity here to start trading in line with some of our peers. The big thing is going to be moving those silver ounces into M&I and getting on with our engineering studies, which we'll get to in the first half of 2023. Our capital structure, you can see here, as I said, no debt, good working capital. Institutional shareholders hold about 26% of Apollo. You can see some of the institutions that invested in us last year there. Jupiter, Joe Lund at Jupiter holds right now over 11% of us on a fully diluted basis. So there's some strong names behind what we're doing. We've got a good team. Myself, I've been in this industry for a number of years, 18 years with BHP. Last 4, I was the Vice President of Exploration out of Singapore. Andy Bowring, our chair, is a name you may have heard of. He's the founder of American Lithium. He's behind Prime Mining. He was behind M2 Cobalt. Steve Thomas is our chair of our audit. He is the CFO of Mountain Province Diamonds. When he and I met, he was the CFO of De Beers Canada. We haven't been around long. It's only been about 18 months since we formed with the amalgamation with a private co. On the back of that amalgamation, we raised $53 million Canadian. 35 million of that was institutions, which I mentioned who participated. In February of this year, we made that maiden resource declaration at our Calico Project. And I'll talk a bit more about that, but there's two deposits there. Waterloo at 116 million ounces of silver, and the neighboring Langtree at 50. We're the first group to hold both of those deposits. And we got our work program underway. And initially, to introduce you to California, I can tell you I got my drill permits from the authorities in California in 6 weeks. There's very few jurisdictions in the world right now where you can get drill permits in that kind of time frame. There's a number of reasons why that is. We are operating in San Bernardino County, California. In the last 15 years, there's been over $60 billion in mineral reserves permitted in that county. In that same 15 years, they have never knocked back a permit application. Okay, there's 89 operating mines in San Bernardino County, California. There are more mines in that county than any other county in the United States of America. It is the second largest county in all of the US outside of Alaska, okay? Some of the names you can see that are operating there, you'll be familiar with Equinox Gold. They have their Castle Mountain operation is in San Bernardino County. Mountain Pass with their rare earth are going through final stages of construction. And that will be, the restart of that I expect will happen probably early in Q1. Cal Portland Cement, Mitsubishi Cement, they're all in there. They supply, the county supplies all of the aggregate and limestone for the Southern Californian construction industry. Gives you a sense that the county is very familiar with responsible resource development and really understands the economic benefit to the county that is derived through resource development. So that's one of the takeaways I hope you leave here today with is California is more nuanced than just a blanket statement. You can't develop resources in California because that is just fundamentally untrue. The second thing that separates us a little bit from a lot of the other groups that are operating in California is the type of title that we hold. At the Waterloo project, which you see there just to the south, those areas in that lighter blue, those are all what the US call fee simple lands, which just means I'm the landowner. I pay property tax. I could build condominiums on that land if I was a property developer and I was so inclined. Okay? And so similarly at Langtree, where the resource is wholly contained on patented lands, patented mineral claims. What this means again in private lands effectively, it means that I don't have a lot of interaction with the Bureau of Land Management, the federal group. It means that I deal with the county of San Bernardino, and that is why I was able to get permits in 6 weeks' time. The other thing about Calico that's important to note, we've got vested mining rights with both those land packages. That doesn't mean I can go start mining tomorrow. What it does mean is that I have one of the permits that I need already in my back pocket. The mining rights have been vested with that title. The other key takeaway here is where there's no national parks in the area, there's no monuments, national forests, and the BLM lands that we do have are open to mineral entry, which means effectively mining is permissible on these lands. That's an overview of the resource that we announced. Waterloo at 116 million ounces of silver, grading about 93 grams per ton. Langtree, the neighboring property to the north, about 50 million ounces at a lower grade. We're really looking at Langtree as a brownfield opportunity. I think the focus is going to be on advancing Waterloo into production, and then Langtree will come or go depending on silver prices. This is a quick overview of the results, some of the results from our first phase of program, and there's a few takeaways that I hope you guys can see here. First of all, mineralization goes to surface. Okay, so it starts at zero. The second thing is it's a thick package of silver, of mineralized silver. So this isn't a high-grade vein, structurally controlled vein system. This is a disseminated system through a package of sedimentary rocks. More like either, the thing to picture would be a porphyry, which is disseminated copper, or something like a Nevada gold opportunity where you have gold disseminated through a package of rocks. The other thing to take away, you can see those thick intersections there. And this is the results from our drilling this year. 94 meters at 151 grams per ton. You can see 105 at over 100 grams per ton. It's a thick package of mineralized rock. The other thing to look at is the topography. Okay, this is going to be an open pit development, and you can see from the way the mineralization comes to surface and the topography, the strip ratio here is going to be very, very low. ASARCO, when they discovered Waterloo back in the 70s, they completed a feasibility study. They had a fully permitted development here. Their strip ratio was 0.2 to 1. All right, so for every 5 tons, or for every ton of waste, I mine 5 tons of ore. That is generally the other way around. I think most of you familiar with this industry will understand the implications of that from an operating cost perspective. Looking forward, we just put out an announcement this morning. We've completed our drill program for this year. We completed roughly 10,000 meters. Assays from the first phase are all out. Assays for the second phase will be released over the coming weeks. Metallurgical test program, we commenced that in June. We had 1.2 tons of core that we inherited from the vendors. And so that material was sent to McClellan down in labs in Reno. And I expect the results from that met work will be available, if not in early December, then early in the new year. We'll get that revised resource estimate out the latter part of January into early February. That's going to move the majority of the material at Waterloo into measured and indicated. And on the back of that, we'll get on with our engineering studies. And it's those two events, really, the revised resource estimate and the engineering studies that really provide us with that re-rating opportunity. So again, to come back to where we started this, you can build mines in California. Don't let people tell you otherwise. It does depend on what part of California you're in. If you've been to Napa Valley, you know you're not building a mine in Napa Valley, all right? But you are going to be able to build a mine in San Bernardino County. That silver that we have, which is currently inferred, a lot of that is going to move into M&I. And so the discount that we're currently trading at as the result of that risk in that resource conversion, that is going to go away. And we've got a balance sheet that is going to carry us through into the late second quarter, third quarter of next year. So I don't need to be out there trying to raise funds in this current, as very difficult market. Thanks very much.